Will gold always shine in times of economic crisis? That is an important question, and we're all eager to know the answer, right? Don't worry, after watching the whole video, you'll get to know why gold is so important. So, welcome back to Finance Professor. Given the remote possibility of gold losing all of its value, gold is regarded as one of the safest investment options. Although gold prices may change, they will never reach $0. In times of unpredictability or economic crisis, the price of the yellow metal spikes drops precisely for this reason. This is extremely clear, since investors would choose safer options over those that are more subject to change economic and geopolitical conditions. When several nations of the world experienced a severe economic crisis in 2000, stock markets once again became extremely volatile. The US military operations in the Middle East, the attack on the World Trade Center in the United States, and the shifting of manufacturing operations overseas were all contributing causes to the stock market's volatility. The unstable stock market forced investors to switch to gold, which was a safer option. Because of this, the average price of gold increased from $271.04 in 2001 to roughly $309.73 in 2002 and $363.38 in 2003. This trend was also evident during the world-shaking 2008 global recession. Numerous economies all around the world experienced collapse as a result of this financial crisis, which was brought on by the failure of the American investment bank Lehman Brothers. In this ambiguous situation, people once again began purchasing gold, which resulted in a rise in its price. From $700 per ounce to $1,900 per ounce in 2011, prices increased. Gold prices started to decrease after 2011 as the stock markets began to rebound. In India, the BSE Sensex dropped by around 50% between 2008 and 9, which raised the price of gold. Gold has long been held in high regard by people all across the world and has special emotional and cultural importance in many nations, including India and China. Gold has been utilized by people and communities for a variety of purposes over the years. When other currencies fail, we always turn to gold, which is why the commodity serves as insurance during difficult times. History has shown that when inflation increases, gold prices likewise tend to climb, while stock markets typically become more erratic and tend to decline. So, gold serves as a fantastic inflation hedge as living expenses rise. Because of this, it's common to hear the phrase, "when in doubt, buy gold," and people are regularly encouraged to do so, particularly if they believe their national currencies are unreliable. Gold is regarded as a reliable store of value, and there is very little likelihood that its price will fall. Many people also place a great deal of sentimental importance on it and regard it as a wonderful method to preserve and pass on their wealth from one generation to the next. The yellow metal once again showed during the COVID crisis that it's still regarded as a shock absorber in a collapsing economy. The economy accelerated this time around as much as a result of low interest rates and surplus of cash, but gold didn't shine much brighter. The precious metal has reclaimed the top spot in performance table as rates are set to gradually rise and cheaper money is set to disappear. In the past 3 months, it has generated returns of about 2%. These funds provide returns of 6.83% over the course of a year. After its remarkable performance during the global financial crisis, gold struggled for a while to shine. This has made many financial gurus rethink their recommendation to buy gold. Many consultants advised investors to be content in debt funds in response to client complaints about the bad performance of gold. The tide is, however, once again shifting in the yellow metal's favor. A lot of investors advise clients to keep 5 to 10% of their overall assets in gold. One is that investing in gold is not like investing in a debt or equity program. Or if you prefer to keep things simple, like stocks or bonds, a commodity is gold. Its price changes are influenced by supply and demand. Undoubtedly, during particular seasons or during times of crisis, demand may increase, but it differs from investing in a business. The business might grow or outsmart its rivals, giving you dividends or a price increase. You should keep this fundamental idea in mind. So, why should you engage? As was already mentioned, it gives your portfolio more security during difficult times. Another justification is that investing in gold is preferable to holding cash. As we've seen, a cheap money strategy entails paying no interest on deposits or very little interest. If you click that subscribe button, you can invest in gold. Don't believe us? Try it. You can invest in gold funds or gold ETFs if you're motivated. These funds keep a careful eye on the gold price. In addition, look into sovereign gold bonds. Regularly, the government opens the window for these bonds. You can invest in them if you have the patience. They provide you with regular interest as well as tax-free returns. By making investments in gold mining firms, you can also take a side interest in the gold market. It is wise to maintain a reasonably diversified portfolio. By investing in several asset classes, one can diversify their portfolio and reduce the correlation between the various asset classes. Gold serves as a strong asset class for diversification, since, as we've already mentioned, it has a negative correlation with various other financial instruments and inverse association with stocks. Multiple negotiations to ease the rising trade tensions between the two countries ended in failure. As a result, gold prices increased between 2018 and 2020. The average price of gold was $1,257.12 in 2017, and it skyrocketed to $1,392.60 in 2019. Despite the availability of a number of other assets, investors favor gold during recessions as it offers the flexibility and liquidity that are most needed. It could be difficult to sell your holdings when necessary if you decide to invest in a real estate rather than gold. It's possible that you won't find any purchases at all. You might not be able to sell your holdings until the lock-in period is over if you choose debt instruments over gold. Gold is therefore the best asset during economic crisis in terms of liquidity. The gold that's produced originates from the nearby gold mines. Because there are so many gold mines, unlike paper money, which can be created, the supply of gold is constrained. When a commodity supply is constrained, its price likewise tends to increase. This is another factor contributing to its reputation as a secure investment. Gold has always been in high demand in nations where it's so deeply ingrained in the culture, such as India and China. Gold has been employed in various cultures as a form of savings and as wedding jewelry. For this reason, people begin purchasing gold during tumultuous times because, in their eyes, it serves as their savings. People tend to hoard money when prices drop and the economy slows down, and gold is the safest asset to store money in. This was shown during the 1920 Great Depression and the 2008 financial crisis when people began investing progressively more in gold. Gold is, therefore, regarded as the finest investment during economic crisis. Even central banks consider putting more gold in their reserves during tumultuous times for safety, liquidity, and return. The pandemic caused central banks' gold holdings to increase, reaching $145 trillion in the first quarter of 2020. Purchasing gold through ETFs is another option for holding gold. For investors who want the advantages of gold investing but don't want to deal with the burden of actual custody and storage, exchange-traded funds offer a quick and simple option. Large inflows into gold-bracketed ETFs have increased their holdings to a value of around $3,185 trillion globally. However, as the FED started raising interest rates to fight inflation, the dollar surged to a 20-year high, which caused gold prices to somewhat decline. But since the US dollar has fallen back from its peak in 2022, gold prices have been allowed to rise again near the end of March. So, will you invest in gold? Do comment your thoughts down below. Also, gold bars or coins, which one do you think is better? If you've enjoyed our video, then please hit that like, subscribe, and bell icons. Also, feel free to refer to other amazing videos on our channel, and we'll see you in the next one.